There's a new government home loan program that lets you buy a house with zero down. Not thousands, not 5,000, zero. And the wildest part, most people think it's only for farmers. Well, it's not. Stay with me because today I'm going to show you exactly how families just like yours are using this to skip the down payment trap completely. Let's go. Now, right off the bat, I want to kill the biggest myth of all. When people think or hear USDA, they picture a farmhouse with a barn out in the back and a tractor in the driveway. That's not what it is. USDA stands for the U.S. Department of Agriculture. Yeah, the same folks who put the inspection stickers on your chicken at the grocery store. But the home loan side of what they do has almost nothing to do with farming. Here's the truth that shocks most of my clients. About 92% of the land in this country, in these United States, is eligible for USDA loans. That's right, you heard me, 92%. That includes thousands of normal suburbs, commuter towns, college towns, and bedroom communities just 20 to 30 minutes outside of most major cities. You don't believe me, huh? Pull out your phone right now, search USDA eligibility map. Type in an address of a neighborhood that you've been daydreaming about, and I'll bet you'll be surprised how often it comes back as an eligible area. The reason most lenders and banks don't talk about this, or you don't see a huge push on all of our social media platforms, is because big banks make less money on USDA loans than they do on conventional loans. So the program quietly helps families who know about it, while everyone else assumes they need 20%, 15, 10, 5% as a down payment. Now just think about it, 92%. That means the odds are way higher that your dream neighborhood qualifies than it doesn't. Keep that in mind as we walk through the income in this next section. Okay, so the second big thing that most people get wrong, people hear income limits and they panic. They think the USDA is welfare or that you have to be barely scraping by to qualify. And that's not even close. I got a great email last week from one of the subscribers on the channel, and they wrote, Robert, our household makes about $115,000 a year. Are we automatically disqualified? Well, the short answer is no, not even close. Let me show you the numbers for 2026. For the USDA guaranteed loan, which is the version that most families use and the version that I help most people with, the baseline income cap for a 1 to 4 person household is about $119,850. So if you make $115,000, you're under that cap. Almost every standard cost area in the country uses the baseline numbers that I just mentioned. Say you live in Austin, Texas. Well, the cap is $149,800. Say you live out in Hawaii, Honolulu, right? Good for you if you do. The cap then goes up to $160,050. You see, the government adjusts these limits based on the cost of living. So in high cost areas, you're not going to get punished because you live there. Now, here's the part most lenders don't explain. USDA looks at your gross income the same way your tax returns does. They use something called adjusted annual income, okay? Now, let me put it into plain English. USDA lets us as lenders subtract certain things from your income before they decide if you qualify or if your income does. Say you have children under the age of 18 that are still living with you. You can subtract a certain dollar amount for that. Say you're paying for daycare, which a lot of folks are today, right? Because you have to go to work. You can subtract for that as well. If you have any big medical bills or a disability in your family, you could subtract for that also. So if you're a family that looks like you're over qualified for the income, say you have about $3,000 in those allowable deductions that can get you under the cap and help you actually qualify. I see this all the time. One more thing that most lenders don't explain is the USDA looks at income in two different ways. There's the eligibility income, which counts the gross income of every adult in the household, even if they're not on the loan. Now, that's used to see if you fit the program. And then there's a repayment income, which is just the people signing the mortgage. That's used to see if you can afford the monthly payment. So there's two different numbers. Please don't mix them up. I know income limits sound scary, but stay with me. Here's the part where it gets really, really good. Here's where most people mess up when looking at the USDA home loan. There isn't just one USDA loan. There are two, and they work completely different. So if you apply for the wrong one, you'll waste weeks of time and end up frustrated. So let me break it down like we're sitting across from one another at the kitchen table, okay? So the first one is the USDA guaranteed loan. As I mentioned before, this is the loan that most lenders like myself are going to do. And this is for most families that I work with. It's funded by private lenders like us. It's backed by the government, however. Think of it like a cosigner guaranteeing a loan. The guaranteed loan is for moderate income families. The 30-year fixed payment is going to be standard. So it's always going to be a 30-year loan fixed as the standard principal and interest payment. And there are no strict rules about how big your house can be. You can have an in-ground pool. It's a normal home loan, just with a zero down payment and the government safety net that comes with it. The second one is the USDA direct loan. This one comes straight from the federal government, meaning you have to deal directly with someone that works at USDA to qualify. It's designed for low and very low income families. The government can give you something called payment assistance that lowers your interest rate as low as 1%. Yeah, you heard me, 1%. Here's the catch. The direct loan comes with strict rules. The house has to be under 2,000 square feet. You can't have an in-ground pool. There are loan amount caps depending on where you live. So it's a beautiful program, but it's not for everybody. So guaranteed is the regular family loan most people use. The direct loan is the deeper help loan with tighter rules. One of my favorite features of the USDA loan, there's no prepayment penalty, ever. Federal law actually forbids it on any USDA mortgage. So what does that mean for you? It means if you get a raise, tax refund, a bonus from work, or even just a really good month, you can throw extra money at the loan and pay it down faster. No fees, no punishment. No, you owe the extra because you paid off early. And here's the bonus of doing that. USDA has a small annual fee that's just 0.35% of the loan amount. Now that amount is calculated on what you actually owe, not on your original loan amount, like on an FHA loan. That means every time you pay down extra towards your principal, you're not just shrinking your loan, you're shrinking that fee as well. It's a quiet little compounding win that adds up over time. If you compare this to the FHA loan, where the same kind of fee is calculated on your original total loan amount that you borrow for the life of the loan, well, with USDA, the more you pay down, the less you pay over time, meaning that annual fee compared to the annual fee for FHA, which you're going to pay that set amount for the life of the loan if you put less than 10% down on FHA. With USDA, as the principal comes down, that fee comes down as well. Okay, here's the last big concept that I want to share with you. This is one of the smart money moves that not enough lenders educate people about. Now, the same subscriber that reached out to me via email last week and asked about me doing this video for you guys asked if they bought USDA, could they refinance into a regular conventional loan? And the answer to that question is absolutely yes. Here's why. That 0.35% USDA annual fee stays for the life of the loan, even though it comes down as your principal comes down, but it doesn't go away. Regular conventional loans, once you achieve that equity position from the original loan amount, then the PMI falls off. So this is how I like to structure USDA loans for folks when they come and work with us. You get the USDA loan to get into the home with zero down as far as the purchase price. You make your payments, the market does what it does, inflation does what it does, and over time your house goes up as well as your principal balance coming down with your monthly payments. Once you hit that 80% or less as far as the principal to equity position, now you can refinance into a conventional loan and wipe out that monthly fee entirely. So to pull this off, you'll need a credit score of at least 620. The higher the better, but minimum 620. You'll need a new appraisal showing your home has gone up in value so that they can assess the equity position that we talked about. And then you'll need to pass some debt to income ratio checks, just like anyone else did when they were looking to qualify for a conventional loan. But guess what? Here's the trap that a lot of people don't realize if you get the wrong loan. This only works cleanly if you have the guaranteed loan. If you took the direct loan and received payment assistance, then refinance triggers something called subsidy recapture. That's a fancy term for the government wanting some of that help back. They want some of that money that they helped you with as far as those payments are concerned. So how much? Possibly up to 50% of how much the home has gone up in value. If your home grew, say 40,000 in value, the government could ask for up to 20% back at closing. And I'm talking about on the refinance. You need to know about it before you sign anything. Remember, you got to know before you owe. So you either need enough equity. If that happens to you and you did the direct loan, you need enough equity to be able to roll in that recapture, right? Or you'll have to come to the closing table with the difference. So this is exactly the kind of thing that a lot of lenders miss, or even you all when you're out doing your research, because there's certain nuances that the internet is just not going to tell you. If you're considering the direct loan, please, please, please get on a call with somebody like myself or someone that you know, like, and trust, and take 10, 15 minutes, have a conversation that could save you tens of thousands of dollars over the next 1 to 3 years. I know that was a lot. Income caps, 2 versions of the USDA loan, annual fees, refinance math, subsidy traps. If your head is spinning a little bit, that's normal. You're not supposed to know all of this. I do this every single day, and I still talk through it slowly enough with my clients so that you don't feel behind and so that you can learn. Here's what I want you to take away from this video. Number one, the USDA loan is not for farmers or farms. It works in thousands of normal suburbs. Number two, you can probably qualify with way more income than you think. Number three, there are 2 versions of the loan. The guaranteed loan is the simpler path. The direct loan has deeper help but stricter rules. Number 4, you can use this loan to get into a home with zero out of pocket, then refinance into a conventional loan in 3 years to cut your costs even more. Number 5, if you go the direct loan route, watch out for the subsidy recapture. If you've been quietly thinking, maybe this could actually work for myself and or my family, that's exactly the right thought. The next step is a quick conversation, not a sales pitch or a hard close, just a real talk about your situation and whether this program fits. To have that conversation, click the link in the pinned comment or the description of this video. You pick a time that works for you, we hop on a call, and we figure out where you actually stand. That's it. If this video helps you, hit the like and hype button if you're on your mobile device so more families can find it. and also subscribe. It really helps the channel, and I thank you in advance. If you want more videos like this one, we got a brand new one coming out every Monday, Wednesday, and Friday. I'll see you on the next one. Indeed.